All right, welcome back to MMG. Let's do a quick pre-market update, some TA. I'll talk about the markets. I'll talk about Bitcoins, and it's just an update, a quick one, so we're on the same page for this week coming up, right? First of all, not financial advice. Consult your licensed financial advisor before buying stocks or cryptos or anything. Do your own research. I could be completely wrong. This is more of an educational channel, learning how to trade and giving you guys my own opinion. I'm not a licensed financial advisor. And yeah, have stops in place, emotions out, and don't invest anything you are not willing to lose or lose sleep over. So, not much has changed on the equity side of things. I'm still expecting a pullback. Here's the VIX weekly chart, volatility index. I mean, when it hits lows like this, it's gonna eventually volatility is gonna pick up, because what happens is you can't have momentum to the upside forever. It loses steam eventually, even though probably the current administration wants stocks to go up for the until the holiday season's over with, and then because nobody wants to see their portfolio fall, and then especially with retirement funds, if they see their portfolio falling, they might cut back or hesitate on Christmas shopping, right, and buying big ticket items and big gifts. But if people see their portfolios up, they think they're richer, this is the wealth effect, then they go out and they spend more money. And it's a consumption based economy, the US, right? So the consumer has to consume. The consumer has to be strong. They keep talking about it on the financial media networks. The dollar. The dollar's been it's been holding up. It's still strong. This is a weekly chart of the dollar. Let's take it to a daily. So, yeah, the dollar is continuing to be strong. This is kind of like the milkshake theory, I guess. In the long term, I don't think the dollar is going to stay strong, but the short term, like maybe the next few months to few years, maybe, I don't know. Um, it all depends on how bad financially and economically the rest of the world is, because at the end of the day, everyone, like the emerging markets, Asia, China, even Europe, has taken out loans in dollar denominations, meaning they have to pay back the loans in dollars. So there's a huge demand for dollars, and it's still probably most likely the number one safe haven asset. Like, move the knee jerk reaction if things start deteriorating on all the stock markets, let's say, or all around the world, people will go into dollars first. Then they will think about bonds, and then precious metals or gold and silver. I don't like saying that word. Anyways, dollar is still looking strong, and it's funny because, like I said, they need a sweet spot. Trump, nobody wants a strong dollar, because the stronger it gets, well, maybe the U.S. does for the short term, because that would mean that emerging markets and the rest of the globe really suffer, and then more capital flies out of those markets and goes into the U.S., and that capital flight will continue to pump the stock market higher and the bond market higher for the U.S. And that's the fact that the U.S. is the cleanest shirt in the dirty hamper, the nicest house on the block in a bad neighborhood. You guys get the analogy. So the dollar doesn't matter. The dollar could go higher and metals could go higher. We've seen that all year this year. So I say let's continue to watch the dollar. It is looking like it wants to break out higher, though. If the dollar could get back above the 90, let me zoom in. Dollar could get back above 98.45, then it's probably heading back up to 100 handle on the dollar index. So this is weighted against other currencies all around the world, not things. You can still see inflation in things like grocery, food, utilities. This index, this price chart, this is the dollar versus all other currencies around the world, or major currencies. Yeah, I mean, if it could get back up to 99.36, then it's probably it's gonna test 100. I don't know. I say we watch the dollar, see what it does. It could just trade sideways for a very long time. It's probably what the most likely scenario is, and probably what this administration wants, because they don't want the world to blow up. Because if the dollar really does get any stronger and it gets above the 100 handle, the global economy, it's not going to be a slowdown. It's going to be the beginning of, the global reset, financial Armageddon, whatever. All right, because you'll get a liquidity crunch globally, because the world reserve currency is the dollar. So the Dow Jones and the S&P 500, let's just look at the S&P. That's all we really need to look at. So this giant move up since December of 2018, the beginning of 2019. This is the swing low. If you look at a 3-day or weekly chart, this entire move up on the S&P 500 this year has been a nice 33.4% increase from the bottom. From the bottom of this huge move down, that huge... It was a 20% crash in 2018. And I thought, and most people thought, that was it. This is it, the big one. And it wasn't. The PPT, plunge protection, came in, and they cut rates, and that saved the market from, having the final correction that it needs, that it's been looking for over a decade now. So I expect a pullback. First fib retracement and moving average would put it around 2,940, around that area. The second major support would be at the 38.2 fib retracement at the bottom part of this major channel on the S&P 500, and the 52 period moving average on the 3-day, or no, that's the 100 period moving average on the 3-day. That would also put it around 2850, 2830, somewhere around that area. I'm using the 3-day because my moving average, my blue equilibrium line, caught that dip perfectly. And I called it too, to buy that dip. Remember? I just got out a little early. I didn't think it was going to, do this. I got out around this area, right, on this pullback. Because I did go long on equities on the SQQ, on the QQQ, not the S. And then I wasn't expecting all this. And this was very choppy as well. So I'm okay not being in long on equities. Either way, I was long on metals mining ETFs, and I did great, right? Okay, so I'm still expecting that pullback. So I'm expecting something like this. Then higher, or boom. This is more likely, I think, the 38.2 fib retracement. The Fed will step in probably around here and do something very dovish speak or rate cuts. If it does fall out of this channel, though, and retest this blue equilibrium line, Fed's going to panic, and we're going to see probably massive rate cuts to 0. And then eventually, if it doesn't rebound very strong and it falls and we start seeing a broadening top, then the Fed will come out and officially call QE4, although we're already doing QE4 right now with the repos, and the repo madness is insane. It's there's a tiny tick down, but it's still, they're about to do, I think tomorrow, their 42-day repo thing. I don't know, guys. I'll monitor it. I'll make a video on that separately. But it's QE4. The 10-year yield finally dropping again as I anticipated. Gold caught a little bounce, but the 10-year yield needs to keep falling, which I expected too if they want to keep the market up or from dumping in a really big way. So I'm still expecting gold to rally higher. Russell 2000. There was a bull flag. It did break out of it, but I think the Russell's looking weak. It doesn't look like the rest of the indices. I mean, it's not even near its all-time highs back in September of 2018. So the Russell's weak, which means the domestic economy for the U.S. is actually not as strong as the other indices like the NASDAQ, Dow Jones, and S&P want to portray. Like I said, those indices are probably going up mainly because of corporate buybacks from the huge, corporations like the FANG stocks. Here's a FANG chart, the FANG index of the FANG stocks. Facebook, Netflix, Google, all those. It's overextended. I'm expecting a pullback on this as well. My heat map is telling me so. There's a 9 TDI sell, my other indicator, and some sort of pullback is also necessary here. It's healthy for a pullback across the board, right? So like I said, if they keep pumping the market higher and it doesn't pull back, that's actually more negative going into first quarter of 2020, in my opinion, because then you're going to get a huge correction as liquidity dries up. I mean, I don't know why. Like I said, the CEOs get their bonuses around fourth quarter of every year, so they like to do corporate buybacks no matter if their stocks are hitting all-time highs, because then they get bigger bonuses, the CEOs and the executives. And then the turnover rate for CEOs in the U.S. now is like really small. It's like 4 years or something. That's horrible, guys. I don't know how you could run a business properly and for the long term efficiently if the turnover rate is so short. That means that top management really doesn't care about the company in the long run. They're just pumping the price of their stock shares so they could exit with golden parachutes. What is this? This is the Dow Transports. This looks weak, although I can see, a head and shoulders, inverse head and shoulders, meaning to the upside. This is bullish, an inverse head and shoulders. The thing is, here, let me draw it real quick. I'm just going to draw it. Shoulder, head, shoulder, technically should break higher. The thing is, the transports, it's not as, I wouldn't use technicals on it as much because the transports is more about fundamentals. If people aren't buying things, the TA doesn't matter on transports. Transports is like an economic indicator. I'm just looking at a chart because it's easier for me and than looking at numbers. So I wouldn't look at TA for transports. I just look at what's happening with it. If it breaks down, the market's going lower, much lower. And people watch that. Smart money watches that. Here's the financials. Look at this. Financials are up like around 30 to 40% from the bottom beginning of this year. And not just that, well, that's really all I have. The repo market should scare financials, but it doesn't because people are complacent and stupid. Here's gold weekly. The weekly is oversold on both silver and gold. Let's take it to a 3-day. That's what's more interesting to me. 3-day. And, oh good, I thought I wasn't recording. You guys have no idea how horrible it is to find out you weren't recording this entire time. Okay, and I'm in a rush right now. So it's really overextended RSI both for silver and gold. Um, a lot of my other indicators, oscillators, MACD, TM squeeze are all overextended to the downside. My other indicator, I'm not gonna say proprietary. It's just I don't share it. I have blue candles, right? That's a big buy signal. Wow, I really blew that up. Hold on. All right. Let me bring it in the focus so you guys can see. Oh my god, the banner's covering everything. Hold on. There you go. And I have to take it off. Still in the bull flag, guys. I know I extended the bull flag. That you could do that. It's okay. And it's still in the greenish Imuku cloud. There's a ton of support, buying support anywhere from 1445, 1450. There's just a ton of buying support. I don't think it's going below 1415, 1420 even. There's a 50% retracement, fib retracement at 1430. It's not going below 1430, guys. In my opinion, I don't think it will because there's just so much buyers that are smart money and everything. And listen, everyone's buying it. Central banks are buying it. There isn't that much more downside. I know the futures are manipulating it. Listen, there's more contracts, futures contracts trading on any single given day than the entire supply of metals, like for the yearly, the amount of supply that's extracted out of the ground. Sometimes there's actually more trading than above ground supply that's not being held, which is insane. Of course, regulators don't care. They're all in on it. They all get jobs, with the banks afterwards. Listen, I just want to say this. I wanted to touch base on this. There's countries talking about banning short selling. They're going to change the rules on us. I'll go more in detail. Listen, the regulators are the short sellers now. It's not the news, financial media. It's not it's the short sellers. They're the ones who busted Enron and all these big scams, and will be possibly Elon. But it's the short sellers because they do all the hard work. And then, they change the laws and the rules so you can't, because you have to understand the stock market, capital gains, huge tax revenue. I'll get more into that later. So I'm still bullish here for the next few weeks and months. This time of season is always bullish for metals. Although the moving averages are going to get a little death crossy here. Death crossy. But I'm still bullish. Especially if the market pulls back. Why? If the market pulls back in a big way, they're going to cut rates again towards the end of December. The daily is neutral. Just looking at it now. It needs to stay above the 38.2 fib retracement, which is essentially 1460. If the price starts falling below 1460, then yeah, we could see a drop to like 1430. But that would be the extent of it if the price does drop down. I don't think it's falling any further down. Can they smash it temporarily down to like 1400 or something? Maybe, but I highly doubt it. I think there's too many central banks and foreigners buying. Which just is. And the market is very toppy. Come on, guys. This is the longest bull market running in history. Economic data, we just ran a 1% GDP growth for this quarter. I know everyone's ignoring the reality, and I don't know how much longer markets can stay irrational, but one day something's gonna happen again, volatility is gonna pick up, and then metals are just gonna spike. And that's what I'm betting on. Is that a great strategy? Not really, but silver did bounce on the 3-day, did bounce off my blue equilibrium line, which is very strong support for silver. And I think as long as silver stays above, I want to say $17, but it could still drop down to like $16.70. As long as it stays above 16.70 or $17, it's just more signs of strength for the metals market. For the short term, for gold, let's go to the 12 hourly, then we'll go to the 4 hourly time frame. 12 hour looks like there's a little more downside to go for the next few days, maybe towards probably the mid of this week or towards the end of this week. Let's take a look at the 4 hour. I have a buy signal for the 4 hour, so that might keep the price up despite the 12 hour time frame. So, metals might not rally this week, but the week after, I'm thinking. Or it all depends if the market sells off this week, which it might not, because they're going to... I'm just thinking, I know it's conspiracy, but they're probably going to somehow keep it from falling because it's the shopping season. They need the consumer to feel comfortable shopping. That's just the way things are, right? They'll probably roll out some trade deal BS, right? Mining ETFs, they're starting to hit major support, and they've consolidated. These look like perfect bull flags and consolidation patterns. And they're consolidating right above the 100 and the 200-day moving averages. So that's another signal that there's consolidation, another leg up possibility, right? Of course, if they do break down, then that's very bad. Tesla, I don't know. I would only consider shorting if the market starts pulling back in a big way. So I would have to wait for the market to pull back. Can it bounce Monday? It could bounce. I don't know. This one's hard to call. It depends on when you started. So if you shorted up here, you're good, right? But if you are looking to short, I don't know. Then I would be very very cautious. So I'm not going to talk about this. It's for private members. Here's Bitcoin. The thing with Bitcoin is it fell below my 7,400 major support. That's very, very negative, although I do have a buy signal from the heat map. Even the buy signal from my other indicator, although there is a death cross, which also sent the price lower. It's a bit overextended to the downside. I don't know if this is a dip buy opportunity. I would wait for the price to get back above 7,400 to possibly go long for a swing trade to the upside. Another thing is Tether's still in the game, guys. Tether did step up and stop it from falling further. So that might be another sign. If you see some volume come in and goes back above 7,400 on Bitcoin, you might want to go long for a swing trade to the upside. Nothing long term. And then I would be looking to short it again. Like somewhere up around, I don't know, 9,100. If it gets up there, even if it could even get up there, we'll see. Again, it could just keep falling. We don't know. So that's what happens when they manipulate the price. You can't trade the damn thing. Go to my website, MMGinvest.com. Actually, use the link below this video. You get a 15% off. Today, we're talking about how you could get a home pennies on the dollar. There's secrets out there, guys. Knowledge is power. For years I've read books, and I came across a book, and I was looking for financial related opportunities. You can get a home, like a $300,000 home, for like $6,000, $8,000, $10,000. There's secrets out there to doing that, and you just have to wait for the perfect opportunity. We talk about that. I'm going to write up a little report on that in the private group. So the product pays for itself. Just that alone, that knowledge alone, despite everything else, the indicators, the trading academy, the reports and the research I do for gold, silver mining, junior mining stocks, pays for itself. 15% discount, and that's as cheap as it gets, and $10 a month to stay in the private group. All right, guys, smash some likes, leave anything in the comment section. See you guys next time.